Good day, everyone. My name is Amina Songosoya, and I will be your moderator for today's webinar. We'll be discussing the emerging issues in the Nigerian tax ecosystem. This webinar is proudly hosted by Stransact Chartered Accountants. Stransact is the correspondent firm of the RSM network in Nigeria, and RSM is the sixth largest network of assurance, tax, and consulting experts with offices all over the world. Transact has been providing solutions to business problems, and we've been doing that for almost 2 decades now. We have our partners with us who has gained their wealth of experience with the big four accounting firms. Of course, I won't be doing this webinar alone, but with great minds, which we'll be learning from them. I have here with me Iben Wells, the managing partner, Transact Chartered Accountants. He has over 20 years experience in audit, tax, and assurance services. Alongside Iben, I have Victor Ate. Victor is the lead partner, tax and strategy, Standard Chartered Accountant. He has over a decade experience in corporate, personal, and cross-border taxations. And lastly, I have Similoluwa Awode. Similoluwa is a senior tax associate in the tax and strategy unit of Standard Chartered Accountants. He has vast experience with income tax, corporate tax, and cross-border taxations. So you can be sure that you are getting a professional opinion here today. As we all know, the Nigerian tax system is filled with lots of complexities, ranging from compliance, multiple taxations, and ever-changing tax laws, such as the Finance Act, that has changed 4 times in the last 5 years. However, despite these challenges, there are a lot of tax incentives that has been brought by the government to assist startups. Example of this is the Nigerian Startup Act of 2022, which was signed into law by the past president, Muhammadu Buhari. These, amongst other incentives, are what we'll be discussing here today. Right before the past president, Muhammadu Buhari, left office, he signed into law the Finance Act 2023, embodying key changes in the Finance Act. We have the Petroleum Profit Tax Act that's changed, the Value Added Tax Act, Stamp Duty Act, Personal Income Tax Act, Capital Gains Tax Act, Company Income Tax Act, and Tertiary Education Tax Act. I would like to hand over the virtual podium to one of our panelists, in person of Victor Ate, who will be discussing some of the key changes to us. We'll be discussing the Petroleum Profit Tax Act, the Value Added Tax Act, Stamp Duty Act, and Personal Income Tax Act. But before I do that, I would like to implore you all to drop your questions, the question and answer section. There's going to be a session where we'll allow you ask your question so that you can get professional opinion right on the spot. So please do well to use the question and answer section. Victor Ate, you have the podium.
Thank you very much, Aminat. That's wonderful intro. And I'll go right to talking about the major changes in some of the acts. I'll start with the Petroleum Profits Tax Act. As we know, this act governs companies into upstream activities, exploration and production of crude oil. As we know, there's been a new law governing these entities now, which we call the Petroleum Industry Act. However, there's still a transitioning window. Some companies are yet to transit fully from the Petroleum Profits Tax Act to the PIA, right? So there was a need for amendments to be passed to the PPT to align with the provisions of the PIA. Part of the amendments are typically upstream companies will claim an expense called decommissioning and abandonment costs. However, most of the time they do this by making a provision that is usually not, indicates that, usually does not indicate commitment of funds. So the amendment now requires that before this expense can be claimed, companies should provide proof, right, that the funds were set aside, right, for the purpose before the expense can be admitted as deductible in their PPT returns, right? The commission, which replaced the Department of Petroleum Resources, DPRO, Nigeria Upstream Petroleum Regulatory Commission, will now determine fiscal oil prices, right, which typically will be compared with the actual price before in the PPTA returns filed by upstream companies. Now, there's also a need to align the penalty pronouncement provisions in the PPTA with the PIA. Under the PPTA, we had the penalty of fiat penalty of 10,000 naira for the first instance, then 2,000 naira for every other day, right? Now the PIA now has provision for penalty of 10 million in the first instance, 2 million for every other day. So there was a need to align the PPTA with the provisions of the PIA. From a value-added tax perspective, the major amendments passed the definition of building. Before now, the definition of building included some movable items like motor vehicles, caravans, things that were movable. So, it became important for that definition to exclude some of these movable items. So right now, if you have items that are movable, that can be detached, right? They no longer qualify for VAT exemption. As we know, goods and services that are VATable now exclude land, building, money, and securities. The date of remittance of VAT for entities that are required to deduct VAT at source has also been brought forward to 14th. Now, for companies that are appointed agents of deduction at source, they no longer have to wait till 21st. They now have to do that on the 14th, earlier than all other companies, that are required to file on the 21st. Now, also for companies that are also non-resident companies that also make sales through digital platforms, sometime in 2022, FIRS appointed I think 2021, FIRS appointed most of them as agents to collect VAT at source and also remit VAT directly to the government. So where, such companies, are already required to collect VAT and remit, the customs authorities no longer have to, impose VAT. Now, they no longer have to include VAT as part of the customs duties when those goods are being cleared at the port. Stamp Duties Act, there's now a new sharing formula, for the electronic money transfer levy. Before now, it used to be 15% to the federal government, 85% to state government, and now 35% from the share, before now, due to the state government, will now go to the local government. So you have a new sharing formula, 15 to federal government, 35 to state, 50 to state government, 35 to local government. Personal income tax, deferred annuity. Before now, it used to be just life assurance. When you make a life assurance for the prior year, that you could claim that as deduction in arriving at your personal income tax payable. But now deferred annuity for your life or that of your spouse is now a liable deduction. I'll stop there for now.
Thank you very much, Victor. That was a good one. Similarly, I would like you to take the 3 sections that remaining. We have the Tertiary Education Tax Act, we have the Company Income Tax Act, and the Capital Gains Tax Act. Similarly, you have the virtual podium.
Yeah, thank you very much, Aminat, for that. So let me go right into the Tertiary Education Tax Act, right? So what was amended was the rate that was from 22.5% to 3%. Remember that small companies are actually exempted from paying the tertiary education tax, or you can call it EDT, that's education tax. So it was only medium-sized companies or large companies that are required to pay this tax. But now they've increased this rate from 2.5% to 3%. Then we move to capital gains tax. So what was included as part of chargeable assets is digital assets. So this calls into question whether cryptocurrency is now a legal tender in Nigeria. So, but the law has made provisions that when you're disposing a digital asset, right, like cryptocurrency, it will be liable to CGT, that's capital gains tax. Then also before now, the law excluded capital loss from deduction from your chargeable gains. But now you can now deduct capital loss from chargeable gains and also roll it over to next year. But you have a limit of 5 years, maximum of 5 years, right? That's if the capital loss exceed the aggregate chargeable gains in that year of assessment. Then also the law also includes class 5, that's stock and shares, to enjoy rollover relief, right? So we move to the Company Income Tax Act. So what was the changes that was made there? That's section 14, which talks about for foreign companies, that's non-resident companies. Remember that Nigerian companies in this industry, that's the industry engaged in air and shipping transport, right? Nigerian industries or Nigerian companies are charged on their worldwide income. But for these companies, when they are filing their return, they have to provide a separate financial statement that includes the Nigeria operations, that talks about the Nigeria operations. But if they are not providing that, to provide a detailed gross revenue statement, right, certified by their directors or certified or attested to by external auditors. So when they're providing that, they also provide the sales invoices they've issued to their customers as well. So in this industry, the regulatory agencies are also mandated to demand from these companies, these foreign companies, these non-resident companies, companies that are not incorporated in Nigeria, to provide TCC, that's a tax clearance certificate, and also their income tax filing as well, right? So this is just to ensure compliance for this company. So they are mandated to do that. Then also the law deleted some sections, amended some sections, deleted some sections. That's section 32, section 34, and also amended section 37. Now these are rural investment allowance, reconstruction investment allowance. Now for companies that incur capital expenditure before the effective date, now remember that the effective date was changed from 1st May 2023 to 1st September 2023. So any company that has incurred an capital expenditure before this effective date, right, can enjoy the investment allowance. But after that effective date, they are exempted from enjoying this investment allowance. And the same goes to the rural investment allowance, as well as the income from convertible currencies. Then also, the law amended the second paragraph of CETA, right? Remember that companies in the manufacturing industry and the agro-allied industry, that's industry that deals with primary agricultural production. So the law defines what primary agricultural production entails. That's if you're into primary crop production, fishery, right? So when you are claiming your capital allowance, there's no restriction for you. Before, other companies that are not into manufacturing and agro-allied, there's restriction, right, to 1/3 of their accessible profits. But for these companies, they have no restriction. Now, the amendment, the Finance Act, now included upstream companies and midstream companies. Now, why are you seeing upstream companies in under CETA? The reason is because of the PIA, that's the Petroleum Industry Act. Remember now that upstream company, or most of the upstream companies, have transitioned to PIA. So they'll be subjected to 2 types of tax, right? And that is CIT and hydrocarbon tax. So under CIT, they have no restrictions for their capital allowance claim. So, and also for midstream companies. So those are the changes that you see in these laws that I just spoke about. Thank you.
Thank you very much, Similoluwa. That was a brief overview of the changes made. It is worthy of note that the past President Muhammadu Buhari also signed into law the Nigerian Startup Act of 2022 to provide an enabling environment for labeled startup. Emphasis on labeled startup, not just anyhow startup, but labeled ones. There are criteria for you to get labeled. I would like to call on Ibe Joel to give us his take and the practicability of this act in the current Nigerian system, given the cash crunch and the dwindling financial reserves of the economy. Even you have the virtual podium.
Thank you, Amina. Yeah, so last year they signed the Startup Act 2022. Prior to that, if you remember, there was a change in the nomenclature, of the Ministry of Communication. They added digital economy to it, so that tells you of the government's intention with respect to that whole sphere, So a lot of people ask, what is a startup? There are two things I like to tell people. A startup, as defined by the Nigerian Startup Act, is different from what you would find a startup to be generally, in the whole venture capital, private equity space. So a startup in the private equity a venture capital space is any business that is intended for scaling, that can be adopted en masse, But as used in the Nigeria Startup Act, it is limited to technology and digital technology or innovation. And the Act has some very interesting provisions that I would like to talk about. Aminat mentioned the fact that the economy is dwindling, but it's not all bad news that has been coming out of Nigeria. Nigeria was the destination for a lot of startup investments in across Africa. Nigeria attracted more startup funding, I think, over the last 10 years compared to other African countries. There's been notable technology startups like Flutterwave. We heard about them. There's Kuda Bank that we know about them, and there are other technology startups that are highly valued. Take OPay, for example, or InterSwitch. These are described as unicorns. That means their valuation is approaching $1 billion. So what this law was set to do was the government, together with those involved in the whole technology eco space, came together and said, how can we stimulate this industry? How can we keep most of these funds that we are attracting in Nigeria? In case you don't know, most startup funds now don't come to Nigeria directly because the startup will typically have a holding company in a developed country. So maybe keep a holding company in the UK, like a Kuda Bank, and then fund the UK company, and then the UK company, which is the holding company, funds the Nigerian company. So what this is trying to do is attract funds directly to these industries in Nigeria. Key provisions: the National Council for Digital Innovation and Entrepreneurship under the leadership of the president himself. So that is very powerful. And then it also had the startup portal, which is supposed to be a one-stop shop for you to register and obtain all manner of permits that you may need for the business. For example, central bank licensing, in case you want to go into the fintech space. You could use the startup support and engagement portal. I don't know if it is live, but more importantly is the fact that if you go through the secretariat of the Startup Act, as set up in the Startup Act, and you're labeled as a startup, it gives you certain benefits. One of them is the tax exemption. In addition to that, the Startup Act created a fund called the Startup Investment Seed Fund, which is supposed to be funded with at least 10 billion naira every year. So this 10 billion naira is supposed to be added to funding early stage businesses. Early stage businesses are some of the most face some of the most serious obstacles when it comes to trying to raise funds. So the act grants 3 years tax exemption, that is pioneer status, to labeled startups in the first instance. Of course, it references the Industrial Development Act, which is the enabling legislation for pioneer status in the first place. you know. More importantly is the fact that venture capitalists, private funds, accelerators, in-labeled startups get a 30% investment tax credit. I'll check how that works, because the investment tax credit is typically limited to purchase of PPE, plant, property, and equipment. So I don't know how it translates to an angel investor if it is something that is claimable only by a corporate body. But we'll see how that goes. But I think the most important provision that an investor would like is the fact that the gains are exempt from capital gains tax. As you know, when an investor comes into a company, he's putting his money basically as shares, equity. So he puts in equity, and then the biggest gain he is going to get is not from the profits of the business, but from equity appreciation. So after a few years, the equity has appreciated, and then he wants to either exit the business altogether, he either takes the business public, or he finds other investors. And at that time, he will realize his capital gains. And in the venture capital industry, private equity industry, capital gains is massive, they're talking about 10x, that is 10 times within a short period, like 5 years, they're trying to do 10 times whatever they put in. And what this startup law is saying is that all that will now be tax exempt. So thank you, Aminat. I think that is an overview here.
Thank you very much, Eben. You've done justice to the act. I believe by now we all know what Startup Act really entails. The chat box has been interactive so far. I've been seeing a bit of questions, and let's just take them. See the ones we can take for our time is up. So someone is asking, he said, if the government will charge tax on the gains of the disposal of cryptocurrency, can we finally say it is legal? Because I didn't see any reason why the government should benefit from a business it fails to recognize and legalize. Oh, this is talking about the capital gains tax, the introduction of the cryptocurrency as a tax that should be subjected. So, Victor, would you like to take that to explain?
Yeah, thank you, Aminat. Talking about whether cryptocurrency is now legal tender. Of course, that's a different issue. However, we all understand that the digital economy is, it has come to stay, right? It's defining, it's dictating the pace, right, when it comes to how economic activities, right, are happening the world over. There's a whole lot happening right now in the digital economy, right? Which is one of the reasons why even the OECD, right, developed an action plan, right, to also address that issue. Nigeria has keyed into some of these OECD initiatives, right? So it has become important that Nigeria also find a legal ground to reap its fair share of taxes, right, from these enormous digital economy. So that underpins the reason for this amendment, right? We all know that the e-naira, right, was created, I think, about 12 months ago, thereabout, right? That's also a digital currency, right? So if this amendment is not passed, there would not be any legal basis, for instance, for government to collect anything, any tax whatsoever from disposal of digital currencies, right? So it's beyond cryptocurrency. Digital currency is wide. It has an expansive scope, right? So this is just a legal basis to enable government reap its fair share of taxes from economic activities going on in the digital space, if you ask me.
Thank you very much, Victor. I came across another question in the chat box, which is still on the subject matter of capital gains tax of cryptocurrency. So this person is asking that if eventually government finally tax us on this cryptocurrency, in what currency will it be remitted?
let me just come in there. Okay, so the first thing is that don't forget that digital assets, that is what Capital Gains Act talked about. And digital assets is not limited to cryptocurrency, you see. So take, for example, even in the music space or in the in the art space, talking about fine arts that are very, very expensive. Some of them are now being digitalized and people are selling their rights as digital assets, and government just wanted to, the Capital Gains Act of Nigeria, as it was archaic. So it had to come up to date with modern times to recognize what assets are today. That said, um, um, the ban on cryptocurrency in Nigeria, don't forget, I think is regulatory. It's from the Central Bank of Nigeria. I'm not sure that it has it's a regulation passed by the Central Bank of Nigeria. I'm not sure that there is substantive law that outrightly bans cryptocurrency in Nigeria. And there's also a whole lot of difference in nomenclature between cryptocurrency and digital currency on one hand. That said, every digital currency is ultimately converted into fiat currency, paper currency, for it to be useful. So even if you are assessed to tax based on your possession or appreciation of digital currency, of course, you pay the tax in the currency. That said, the government itself can hold the digital currency. They can seize your cryptocurrency wallet, for example, if you are owing government and you hidden your assets as crypto. They can seize it and hold it in their own name. It's an asset. Once something is an asset, it is no longer a local thing. It is not limited to Nigeria. It can be sold anywhere in the world. I don't know if I've done justice to that question. I mean,
Yes, Iben, you've done justice to the question. Thank you very much for that wonderful nugget you just shared. So I was scrolling through the chat box. I also saw a question from Gabriel. Not let just say a suggestion. He said, in all truth, startup act has a zero bite. Imagine, I was caught by that word. He said it has a zero bite. Since it was signed, the portal has not been running. So this person is like, okay, you say you pass something into law, yet it is not functioning. So he said this is just another of those acts that will later be redundant, just like the sections that were deleted under the CETA. So Iben, can you just tell this person that okay, this avenue will give them the insight as to how this startup act would work?
okay, so I don't really agree with the with Gabriel. I think that you said that is his name. On whether or not Startup Act has a zero bite. The thing about law is that it gives you certain rights that you don't have until that law is passed. It is left for you to exercise the rights conferred on you by law. So you are right. Based on politics of Nigeria, you all know that one of the most powerful ministers in the last government was the Minister for Digital Economy. He was powerful. He could. So if he had his own dreams, and this legislation came out of his efforts and part of his engagement with the sector, there's been a new government. It may take some time for this act to gain traction. However, the act has some important provisions that entrepreneurs can use without waiting for government. One of them is apply for labeling. If you meet the criteria and you tick the box, right? Check wherever their space is within NITDA, I can assure you that once government laws are passed and it creates, a bureaucratic body, that body will start functioning, even though it may not be doing what it's supposed to do. So I'm sure that within NITDA, there's already the Secretariat for Implementation of Startup Act, apply to them for labeling. Why are you doing that? Because you want the 3-year tax exemption. The law has given you that one. You're not waiting for government. And it makes your life easier. Unlike going to NIPC to ask for a pioneer status, for example, which may be a long thing. This one has basic requirements that are there that you just need to fill in, check the box, apply, enjoy your tax labeling, or at least put in the application. So it has very important provisions that can stimulate the economy. That is what I say. Of course, things like the 10 billion naira available funding. This government is also talking about setting aside money for small businesses, for example. So hopefully within the next few months, since it's still a relatively new government, they'll be able to synergize their overall economic plan and not do away with the startup act. Yeah.
Thank you very much, Eben. The chat box is just raging over the Startup Act. People are very much interested in that topic. So you've done justice to it. So thank you very much. Well, this question is on Value Added Tax Act. This person is asking that, what is the real date for remitting our VAT returns? Is it on the 14th or 21st? Because, people are confused. I have a friend that walked into me and I was like, when are we supposed to remit VAT? Is it 14th or 21? I'm sure some other people are here that are having that dilemma that which of them are we supposed to do? So, Simi, can you please enlighten them?
Yeah, thank you, Aminat, for that question. The question as regards remittance, right? Remember that the law appoints companies, oil and gas companies, to deduct at source and remit to the service, the FRS, that's the Federal Inland Revenue Service. Then also FRS is also given power to appoint companies, and they did, and they appointed Airtel, MTN, and deposit money banks, right, to deduct at source. So now the law now gives them a date for remitting that VAT that they deducted, which is 14th. But they also have their own remittance, which of their output VAT on the 21st. So the companies that have been appointed by FRS or by law have two dates. There's the 14th. The 14th to remit the VAT that was withheld at source. Then the 21st is the output VAT, right? So all other companies is still 21st, is not affected. They don't have, the date is still remains the same, which is 21st, right? But for companies that are appointed by FRS, right, to deduct at source, what they are deducting should be remitted on the 14th of the following month. So that's just to aid compliance. And I think the task force is trying to structure to fit in with these changes in the law. Yeah. So I hope I answered that question.
Yes, thank you very much, Simi. So Oluranti is asking, what other incentives is available to replace the investment allowance that was deleted by the service? So Victor, you please tell me about it.
Yeah, so the investment allowance, right? 10% claim on additions to plant and machinery. Of course, the interesting thing about that allowance was that it was not you could claim the allowance without it impacting the tax, the tax return value, right? Or what you call the tax carrying amount, right, of the asset. However, what government is trying to do here is also trying to over the years, there's been a lot of talk about multiplicity of incentives, by government giving too many incentives and all of that, so I think this is just one of the moves to the government to up the tax collection, right? Because what investment allowance does is it directly reduces the taxable profit, right? And it impacts your taxable profit and reduces the tax base, right? So, that is, so it's going to be more tax collection for the government, whether they're So the question here is whether there is any other allowance to replace investment allowance. Well, based on the laws as it is, there's no, I don't see any commensurate, allowance that has been passed into the law currently to replace that investment, allowance. Well, my advice is that companies should plan their plan their activities. So that there's a lot of opportunity in the tax law, right, to plan for tax planning, right, corporate tax planning, right. So my advice is talk to a professional about how to plan your tax affairs. If you do that, there's a whole lot of likelihood that your effective tax rates may be reduced.
Thank you very much, Victor. So still on the subject matter of the cryptocurrency, someone is saying in the chat box that they don't actually think the government can seize their cryptocurrency. Why? Because there are some cryptocurrency that cannot be traced to the individual. And when that cannot be done, the service cannot come and say, okay, I want to tax. Since it's what you see that you tax. So since there's a way that they can be laundering and a way to evade tax, what can government do? Because the act is not just talking about that.
Okay, so let me just say that we as a firm, we have local knowledge, right? But we think globally, for us to be effective. So when we are talking government, we're not just looking at Nigerian government, we're talking of government, any government. Okay, governments are very, very powerful. They hold all the powers of society, So if you follow the news, for example, the US government recently arrested someone who stole a lot of cryptocurrency, and seized a lot of the person's cryptocurrency. So we've seen that already happening in other developed countries, for example, where the IRS raids a person and seizes the person's assets. If they seize your asset, your asset is not limited to, to just your physical assets. That is what we're talking about. It includes your digital assets, and your digital assets include cryptocurrencies. So governments anywhere in the world, has the reach, to say, okay, you've hidden your money here. They know, so it may be more difficult for them to get access to your digital wallet and say they want to seize it. But the best protection is not to be engaged in criminal acts in the first place. Which is one of the things that is sad about the banning of cryptocurrency in Nigeria, is that we think of everything from a criminal perspective. Cryptocurrencies were not invented to aid crime. So it's not like people who hold crypto are not criminals. It was not created for you to evade taxes or to hide money illegally. So if we get that right, and we understand that the intention of cryptocurrency, whether it's Bitcoin, whether it's Ethereum, whatever it is actually to foster a more open transaction environment, where people are keeping simultaneous ledgers so that everybody can see what is happening in your wallet and can trace, and a lot of technology is already being developed, based on that whole blockchain industry. It's transformed technology as we know it. A lot of applications are using the blockchain technology, which all these cryptocurrencies rely on, has done a lot of good for all of us. So if we get that perspective right, then you will see that if you're engaged in criminal acts, don't think that cryptocurrencies or digital currencies will save you If you take somebody like Hush Puppy, who is serving his time in jail as a, here in the US, you think if he has any digital currency by now, the government won't find it? They will, you know. So I mean, that is my answer in a short form. Yeah.
Thank you very much, Eben. That was a good one. I believe the person that asked that will have gotten the answer to the question. So someone is asking, he or she wants an insight on the consumption tax and value-added tax. Are they similar or different? Are we being cheated by being taxed? So, Victor, can you please help us on that?
Yeah, so I mean, consumption tax, is a state tax, right? It was enacted by Lagos State, right? So if you look at the base, they all appear to have the same base. However, we're all aware of the prevailing controversy, right, that has been stored, right? Talking about whether VAT should even, be legally imposed by the federal government or by states, right? So we can argue about this, but the fact remains that as it is now, yeah, of course, they all have the same base. But as it is now, VAT is still collected by the federal government, right? VAT is a different law. Consumption tax is a different law. So they are different laws, so the issue of whether we're being cheated is something we can talk about, right? But the interesting thing about law is once the law has made a pronouncement and there's no ruling, there's no judicial precedent, right, to stop the implementation of the law as it is, then I mean taxpayers are bound to align, to follow the law, to the letter. That's how I address that.
Thank you very much, Victor. Thank you. That was a good one. Okay, so there's this question about the increments in education tax from 2.5% to 3%. So this person is asking, recently, I mean, they just removed subsidy. Then we have the recently hiked the price of goods and services. All these attune to the expenses, overhead expenses of manufacturing firms, especially. Now you are saying they should still pay education tax. What do you think about the act? Simi, can you just give us an insight as to the increment in tertiary education tax and how it stands to affect companies?
Yeah, so concerning this question, first and foremost, the company or the government has actually given incentive to small companies, right? I think I said that when I was explaining the changes in the tertiary education tax. So they are actually exempted. So if your gross turnover is actually below, you have 25 million or below, right? You are exempted from tertiary education tax. But for companies, right, like the medium-sized and the large-sized companies, you have to pay EDT. So I think the government is trying to restructure the education sector, right? Even notice some of the things they are trying to do, the focus on education, right? They are trying to drive more revenue to improve that as well. Even notice also there's also the introduction of the student loan, right? So I think government cannot do it all on their own. So they need the helps of the companies, right, that are incorporated in Nigeria to actually provide source of fund for this venture. So I think that was the reason why they had to increase that rate from 2.5 to 3%. So, but there are other incentives that government is trying to provide for companies actually because there are many things that are also on the way, right, to do that. But that is my take for that. But I know they're also trying to do certain things to cushion the effect of what's happening in the economy. So that's my response to that question.
Thank you very much, Simi. So still on VAT. So someone is asking, does pears and raw materials imported into Nigeria attract 7.5% VAT? If yes, who collects that tax and who remits it? So, Victor, can you just throw more light on raw materials imported into Nigeria? This still attracts VAT at 7.5% rate?
Yes, raw materials. Okay, so now when you talk about spares and raw materials, that that appears to be generic, right? When you talk about VAT, you have to identify the category of that item, whether it's a good or a service. You have to check and look at, what the VAT Act says. There's a list of exempt items. So the first thing is to check the spares in question, the raw material. Is it under the list of exempt items? Now, how do you identify the exempt item? Look at the first schedule to the VAT Act. Look at the the subsisting VAT modification order. I think the most recent one is the VAT modification order of 2021. If you don't find whatever item this is under the list of exempt items, then you can conclude that it is VAT exempt. And even the custom, when these items come into Nigeria, they'll come in through the port, right? So the customs authority will typically impose VAT if they are VATable, right, based on the CET code, right? If they are not VATable, then to be exempted from VAT. So naturally, the custom duty imposed at the port of entry will take care of all of that. But remember, I think I mentioned during my earlier comments that where a non-resident supplier, right, has charged VAT on its own invoice, because now non-resident suppliers are now mandated, right, to charge and collect and remit VAT. So where that has been done, then the custom authority will not insist on imposing VAT at the ports. Right. However, for VAT exemption, you have to look at the VAT the list. Once it is not on the VAT list, then it is not exempt.
Victor, the person is asking, in what currency should such VAT be remitted?
In what currency? Yeah, currency of transaction. Typically, that's what the law says. Currency of transaction. So, currency of transaction simply means currency of settlement. You pay in USD, you pay over your taxes in application, except there are times where, because of scarcity of, for one reason or the other, government says, okay, you are allowed to use social exchange rate to compare the law, right? Typically, requires that tax be paid in the currency of settlement of whatever transaction it is. I believe that is clear enough, right?
Yes, Victor, that's clear enough. We have a lot of questions coming in, but we are fine behind our scheduled time. I think we'll just take one more question and we'll call it a webinar. Okay, so another interesting question on EDT. The person is asking, why are governments still charging EDT? Imagine they just increased from 2.5% to 3%, when tertiary institutions have increased their tuition fees in recent times. So how do you think about that, Victor?
Do you still want me to take it? Okay,
Yeah.
okay. So EDT, EDT is law, it's a matter of law, right? If the law says this rate has been increased, right? Of course, you can talk about moral justification. You can talk about is there, is it reasonable? What is the rationale economically, right? Of course, we all know that we have public institutions, we have private institutions, right? The public institutions, of course, they get interventions from the government, right? But they also have to cater, right, for their well-being in a way, right? So, I mean, it's a matter of morality. If you ask me, I don't even think it is right for government to even increase any tax rates in our country as it is, right? Because there are a lot of inefficiencies around cost of governance. I mean, we all see these things. And I believe there are things that should be addressed fundamentally, right, rather than trying to push the burden of increased, budgetary requirements to the already impoverished, public or masses, right? That would be my take on that.
Aminat, before you go and
Okay.
before we go, somebody, I think his name is Dotun, asked a very important question, which is what are the implications of tax reforms, of ongoing tax reforms on taxpayers and consultants? And then he concluded that as there will be merger of prevailing taxes in Nigeria. Now, let me say the question as phrased, of course, is a bit difficult to understand because it concludes that as there will be merger of prevailing taxes in Nigeria. So I'll just clarify. First of all, the Tax and Fiscal Reform Committee that the president set up has not submitted any report that has been passed into law. So if you read the chairman Taiwo's comments, and he's saying he's going to reduce the number of taxes, for example. Those are intentions, right? Those are his intentions, the intention of his committee. There is no proof that those intentions will ultimately become law until they do. So until they do, you just watch, okay? Many committees are set up in Nigeria, and a lot of them don't become we've grown to be naturally skeptical of the effect of some of these committees. Let me say that is a tough position for people in that committee because they are working in a government where the tradition of government in Nigeria is actually to multiply taxes. If you check for every new legislation that is passed in Nigeria, there will be a funding mechanism. And that funding mechanism will always be to tax businesses. Check. Pass a new law. It's not just education trust, tertiary institution acts that companies face. There are a whole lot of from NDDC levy if you supply this, to meet that levy if you're in technology space, so there are a whole lot of more levies and they keep coming up. Okay. That is the tradition of government. So as you and I know, for example, as educated as we all are here, some of the most important, difficult things to drop are things that you inherited from your culture or tradition, or this is how your belief system. And what I'm saying is our government has traditionally operated by multiplying taxes. So how a committee will come and change that mindset completely and reduce our taxes to 6 or 7 or 10, we would watch and we would be happy if we get to that stage. But we are very, very far from that stage right now. So that is my comment. I don't know if I answered the Dotun's question. Yes, thank you, Amina.
Yes, I believe you done justice to Dotun's question. Okay. We'll have to call it a webinar from here because we are running out of time. A very big thank you to all our participants. We have over 140 participants in this session. Thank you very much for your time. Thank you to the facilitator, the panelists, and the technical team. Due to time constraints, some of your questions were unanswered. You can do well to forward them to info@stransact.com and we'll provide solutions to them. Or better still, call us on our contact line. Thank you very much and do enjoy the rest of your day.